If you're curious about smart contracts and want to understand how they work and the risks involved, let's dive in together. First off, let's get clear on what a smart contract is. Imagine a vending machine. You put in money, select your item, and the machine automatically dispenses it. No middleman, no fuss. Smart contracts work similarly. They're self-executing contracts with the terms directly written into code, and they automatically execute when certain conditions are met. Now, you might be wondering, how are these smart contracts audited? Think of auditing as a security check, just like you might have a mechanic inspect a car before you buy it. Smart contracts need to be checked for any potential issues before they are deployed. Auditing a smart contract involves several steps. First, the code is reviewed line by line. This is like a teacher grading a paper, looking for any mistakes or areas that need improvement. Auditors look for vulnerabilities that could be exploited by hackers, such as logic errors, overflow issues, or insecure coding practices. Next, auditors use automated tools to scan the code. These tools are like metal detectors at an airport, scanning for hidden threats that might not be visible to the naked eye. They can identify common vulnerabilities and flag areas of concern. After the automated scan, auditors perform manual testing. This is where they really get their hands dirty, trying to break the contract by simulating various scenarios. It's like a security expert testing a lock by trying different keys and techniques to see if they can get it. Finally, auditors provide a report detailing their findings. This report is like a report card, showing what was done well and what needs improvement. It includes recommendations for fixing any vulnerabilities and ensuring the contract is secure. So, how do hackers hack smart contracts? Well, hackers are always looking for weaknesses to exploit, and smart contracts are no exception. Let's explore some common ways hackers can breach these contracts. One common method is exploiting logic errors. Imagine a smart contract is like a recipe. If the recipe says to add salt twice, but never mentions sugar, the final dish won't taste right. Similarly, if there's a mistake in the contract's logic, hackers can exploit it to their advantage. For example, they might find a way to withdraw more funds than they're supposed to. Another method is taking advantage of overflow issues. Think of it like an odometer on a car. When it reaches its maximum value, it rolls over to zero. In smart contracts, if a calculation exceeds the maximum value that can be stored, it can roll over, leading to unexpected behavior. Hackers can manipulate these overflows to siphon off funds. Insecure coding practices are another target for hackers. Just like leaving our front door unlocked makes it easier for burglars to get in. Writing insecure code makes it easier for hackers to exploit. For example, if a contract doesn't properly check the identity of the person making a request, hackers can impersonate others and gain unauthorized access. Hackers also use re-entrancy attacks. Imagine you're filling a bucket with water, but there's a hole in the bottom, and the water keeps leaking out. In a re-entrancy attack, a hacker repeatedly calls a function before the initial execution is complete, causing the contract to behave in unexpected ways. This can lead to multiple withdrawals or other unintended actions. Finally, hackers can exploit external calls. If a smart contract relies on data from external source, like an oracle, hackers can manipulate that data to their advantage. It's like changing the answers on the test after it's been graded. By providing false data, hackers can trick the contract into executing actions based on incorrect information. So why does this matter? Understanding how smart contracts are audited and how hackers can exploit them is crucial for anyone involved in the world of blockchain and cryptocurrency. It's like knowing the safety features of a car before you drive it. By being aware of the risks and taking steps to mitigate them, we can create a more secure and trustworthy environment for smart contracts. In summary, auditing smart contracts involves a thorough review of the code, automated scanning, manual testing, and a detailed report. Hackers can exploit logical errors, overflow issues, insecure coding practices, re-entry attacks, and external calls. By understanding these risks and how to address them, we can help ensure the security and integrity of smart contracts. Thanks for joining me on this journey to understand smart contracts, the auditing processes, and the potential risks. If you found this helpful, give us a thumbs up and don't forget to subscribe for more insights. Let's keep learning and growing together at Asset Tech.